All right. I'm going to be using this Moodle for you, so you can catch up faster. At least this should help you more and more and more, right? And till let's proceed, right? Because now I'm taking you to advanced structure, which you should focus very well, and I expect um you to understand. I mean, even if you do not understand, I expect you to keep on watching and watching and watching this video once again, because this is advanced market structure, which will always um, you know always want to improve you whenever you understand this market structure very well. All right, so now let's move to um, we should go back to a review of the swing high and the swing low. What does swing high and swing low actually means, and we talk about the impulse or correctional move. We talk about the trending while market was ranging, and we talk about valid structure, which very important. The valid structure and the weak structure, and also we'll talk about the break of structure, deep break of structure knowledge, understanding what break of structure entails and why is it important. We'll talk about the break of structure and change of character. We'll talk about the why, what you must always call a break of structure, and then we'll talk about when market is trending, how to identify the break of structure, and also the fake pullback, right? Which has led a lot of traders into traps. So, and we're going to proceed. Then I'm going to stop at the time frame bias, right? The time frame bias, time frame structure, the higher time frame bias, lower time frame execution, alignment of break of structure, common mistakes, common that mistake that traders does in identifying, choosing time frames. I'm going to pick you through, I am scraping all of those mistakes so you don't do that mistake, right? And that is why a mentor is also a mentor, because you want to beat out some things that your mentor has gone through, right? Because it's going to filter all of those things you're going to come across, then so that you will not come across it, it's going to just teach you the exact things he does. So, and then by the end of this class, I want to expect that you already should be able to identify break of structure, market biases, should be able to identify time frames, right? You should be able to know, okay, this time frame has aligned with this time frame has aligned with this time frame, are we together? So let's now move to the very beginning, which is what? Swing high and swing low. This is not a new topic, which I've already explained previously. Swing high and swing low, right? So when you are seeing a structure, two things occurs: the swing high and the swing low. Even if you are selling, even if market is dropping, even if market is ranging, even if market is buying, two things occur, which is what? Swing high and swing low, right? And how do we identify this swing high and swing low? Let's move to the chart. Now on the chart, I'm going to do the sketching out and then showing you on the chart, on the real chart, right? I'm going to do out the sketching and then I'm going to show you on the real chart. Now, identifying a swing high and a swing low, it's just very simple. First, what you want to do is what? You want to open your chart. The first thing you do is open your chart. Now, as you open your chart, there is something your initiative should first tell you, that is this market coming down, or is it going up, or is it just going sideways? Now, if that initiative can answer, if you can answer to that first question that comes to your head, well, as you open the chart, you're going to definitely see candlesticks. Now, where is that candlestick coming to, or where is it going to? Do you understand? So if you open your chart and then you just see, excuse me, you just see something like this. If you open your chart, you just see something like this. What you want to ask yourself is, this thing, is it dropping or is it buying? Of course, it is dropping. It is not going up. It is dropping. Now, if it is right here that you open your chart and then you see something like this, what you want to ask yourself is this thing dropping or going high? Of course, it is going high because all of this right here to this place dropped, but the current movement, which is all of this is the current movement, because if you open your chart, your market should be around right here, and then you start from your left hand side, and then you see how market has moved towards this side. So you should know that market is going up. That is the first thing that you should first ask yourself. If I open my chart, where is the market actually heading to? That is the first thing. Now, if I open my chart around here, right, and the market is right here, I will ask myself, what is the market saying? Is it going high or dropping? Now, if I can answer that question, the next thing I want to do is what? I want to mark out the swing high and the swing low. Simple as that. Now, if I open my chart and I see something like this, and the market, it means market is right here, then what will I say? I'll say, okay, market was previously going higher. Market is just going higher. Of course, you will see it right there to this point. Market was going higher. So, but all of this seems what? Still, market is still going higher. Why? Because this one has not. I'm going to explain it. But right now, what I want to say is market is going higher. That is, I want to be able to mark out my swing high and my swing low. Now, if I can identify market is going higher with first glance, first instance, where is market going to? Market is going higher. Now, let's do it this way. Let's do it this way. Now, if I make it like this, and then we are like this. Now, where is the market? What is the market saying? I want to see the market. I want to answer myself first. I've opened my chart and I saw it like this. What's the market saying? Market is going higher. That is it, because this is all I can see on my screen from right here to this right here to this point right here, and then finally market is right here. This is what I can see. That is, from this point market has been going up. So if market now comes down towards this point right here, it means market is no more going higher again. That is it. Am I communicating? That is, market moved from right here and then it moved higher, then it's just coming inside the eye. That is, it has not come back to this low. If it comes back to that low, it means market is not going higher. So it is just your first glance that you will use to identify what exactly is the market saying. Where is it going to? Simple as that. Now, it now make me go back to the swing high and the swing low. Now, if you can answer that question, then you can see that first glance, right? And then you can see that, okay, this thing is going higher, this thing is going lower. Now, one of the mistakes that traders, upcoming traders that are just getting into the intermediate session rather, is that if you ask them what is the market saying, what they will be saying is market is dropping, market go up, market. Don't confuse yourself. There's nothing like market is dropping, market is. All of that as what we call structure. But there is one thing you want to see: where market is coming from, and then where market headed to. It is that point that you want to see. Let me use another chart. Let's use another chart. Let's perhaps just take any chart precisely. So this is DXY. Now, when I open my chart like this, what am I seeing? Of course, market is going up. This doesn't concern me. This point, dropping right here, doesn't concern me. What concerns me is this current movement. That concerns me. Do you understand? That is what concerns me. So if I am able, right, to identify the current trend, that is, it is that current trend I want to dance into. Now, let me go to another chart and ask one question again. Now, what is the market saying right now? What is the market saying right now? Now, if you say market is buying, you are very wrong, because you are looking into this point to this point, and then you are looking into this point to this point. But what you want to look is the current movement, that is from this like, okay, let me break it down for you. Take it from like 2 months, 1 month back, 1 month or 1 month and a half back to the current date you are. Now check, is it going high or dropping? of course you see a market is dropping. Why? Because look at this point right here. When I open my chart, what I could see is market is coming down. Now let's now go to that swing high and swing low so you can understand very better without wasting much of our time. Because forex market is not logic. It is what? It is practical. Do you get? Now, for you to be able to understand market structure, you have to first of all forget some things. First, you have to forget what we call the internal structure. We're going to get into that. Now, the basic knowledge I'm going to drop right now is for you to identify this. Now, market is moving up. That is, this is how market has been going. This is how market has been going, right? Now, if I now ask you a question, right, that uh, let me just call Emeka. Emeka, where is the market heading to? Now, will you tell me the market is selling because of this drop? No. You will tell me market is what? Buying, because that is what it has been doing for a very long time. Are you understanding? That is market structure. Now, if you open this chart and then you see something like this, Emeka, you will not be able to tell me that this market is actually selling just because of this move. No. Because you would look for the all-time move that market has been giving. Look at it. Market has been going like this. So it has been giving structures telling you that market is going high, right? Filtering all these cells that are inside it. Now, all these cells that are inside it, market is filtering it. Now, identifying a swing high and a swing low is not difficult. Now, in the sense that market is actually buying, market is going bullish, right? One thing you want to see is market will come from the low, from the down to the up. That is it. Market wants to go up. Market, of course, if you want to go up, you are from the down before you go up. You cannot be up and then you are still going up. No. You are, even if you are up and you are still going up, it means that point you are currently, it means it is a low for you. I don't know if someone is getting me. So if you are on, it means before someone can go up, right, you are from a bottom. Yeah, you are from a bottom before you can go up. So you can just you cannot find yourself up and then you say, I'm already up, I didn't come from the low. It's not possible. Do you understand? So market always has to start from the low before it goes up. Now, if market wants to fall also, I mean sell also, or go bearish also, it has to come from the up and drop down. Now, imagine a mango hanging, right? Now, that is the limit of that mango, right? Now, you will notice that if mango will fall, it will drop and it will not go up again. Do you understand? Now, mango will drop, right? That is, mango has what? Fallen. If it is euro US dollar will drop. That is, euro US dollar have what? Dropped. Do you understand? If mango will go higher, it means it has to find uh, a bottom that it has to stay before it can go higher. Do you understand? Now, if no one plucks a mango, right, it's obviously telling you that the mango will remain at that level for a very long time. Only if something falls it, right? Now, if something is going to tamper with mango, it will not make it go high. Now, if something is going to tamper with mango, if it's going to go up, it means they have to cut down the mango from the tree, make it drop, and then throw it up. Can you see? That is how forex market is. I think this illustration can really help you a lot. You should expect that anything that is already down is expected to go up in forex market. If the chart is already down, expect up movement. If the chart is already up, expect down movement. I think this explanation should make you understand. Now, this is the very down of this particular chart. Right, this is a very down. For instance, this chart A, and then if market is going to go up, that's to start from this down, from the bottom, and then go up. Do you understand? If market is going to come down, that's to start from the top, right? That's to start from this top and drops. Do you understand? And drops. Then you know that okay, market has dropped. Do you get? Okay, let me use an arrow. Right, let me use an arrow so you would see that very well. Right, and then this, right, and drops. Right. So now you notice that all of this is telling you one thing, that market is what? Dropping. Do you get that now? Market is dropping. Right? Market is dropping because it comes from the high and start dropping. Now it comes from the low and start going up. That is how you identify the market low or the market high. Now in a scenario, let's pick it one after the other. In a scenario when market is perhaps selling, well, sorry, when market is perhaps buying, we want to talk about the bullish move. Don't forget that I said it's going to come from the down and go up. Now, it doesn't just go up like that. The up, it always has a limit. When market move from the ground and then go up, right? It always has have a limit. Then it needs another strength to go higher very well. If market is meant to go up, it always needs more strength to go up. That is, if a vehicle wants to go from Lagos to Abuja, it always needs fuel, right, to fill the tank so you can go to Abuja. Now, once it gets to perhaps Port Harcourt, it needs to get another fuel, right, so that that fuel can push him to what? Abuja. I don't know if you are getting this concept now. Now, because you will not just expect the fuel in that vehicle to just drive you from Lagos to Abuja. Very perfect, right? You always need a fuel to fill your tank so that you can go further to your destination. Do you understand? Now, there is always limit on the market too. One market is coming from the down. Of course, if it goes up, it has to be exhausted. Needs another what? Energy. Do you understand? Needs another energy to make it go higher. Simple illustration. If it goes higher, if it collects another energy and goes higher, it has to be exhausted. Need another energy to go higher because the market, the price of that movement or of that market, it's meant to go higher. Now, if market is falling also, it has to do what? It has to drop. The same concept behind the bulls is the same concept behind the bears. There is no different because you are hearing bulls and bears means they have different, yeah, they are different animals, right? Yeah, I know they are different animals. But in terms of market, the same concept that applies to the bulls is the same concept that applies to the what? To the bears. Now, if market is dropping, it needs another energy because as it's dropping, it is exhausted. It's going to get exhausted. It needs another energy to make it go lower. Do you understand? If it comes low from the high, if it's from the top, if it comes down to the low, it needs another energy to make it go lower. Now, this is where it now comes to this simple logic. Now, as soon as it comes from this low, it moves higher, it created high. Now, this is our low, don't forget, because it comes from this low, and then it created this point, which is the limit. Let's mark this point as the limit. I'm coming. I'm going to mark this point as the limit. We're going to do for the selling pressure also, so that you will not get confused. Now, this is the limit, right? Because don't forget, I told you that it always has limit, right? It always has limit. This is another limit. Let me put another one right here. Okay, we're going to use this. We're going to use this as another limit, right? We're going to use that point as another limit. Now, let's proceed. Now, this is the limit, right? This is the limit, right? Which means what? Which means that if market gets to this limit, this top from the low, right? It needs another energy. That energy that it needs to collect, this is the energy that it needs to collect. Now, from that energy, if it gets to some certain level, because that energy will not go back to this origin or to this low again. No, it ought to collect all the energy needed, and then before you do what? Before it pushed up again. Then, if it collects that energy needed, it will now come back to go higher than the previous high because it has collected that energy very well. Are we together? It has collect that energy very well. So now if it goes again and then it exhausts itself, right? And it get to the limit, right? It has to do what? It has to drop further again to collect some energy. After it collects some energy, it has to push higher again. It has to push higher, breaking this previous high. Why? Because it has gotten another energy. Now imagine in this way, simple logic. You got energy right here, energy boost right here, and then you use all the whole energy boost. You use it right here, you're exhausted. You come back again, you take another energy boost. Do you know that the energy boost, if you take the same amount of energy boost right here, you take it right here also. You know that it has to go this same move, it has to give you the same strength that push the market right here. It has to give you the same strength again, which is supposed to pass this place. Because if you measure from this point to this point, right, it is not the half it's going to give. It's going to give you the full strength also. So the full strength also should be more than this previous strength, because it's not coming from the bottom. It is from where? It is from either half or almost half. Do you understand? Now you take another glucoside boost, you boost yourself energy, it gives you this high. You got exhausted. Now this high also, it got exhausted, you get another glucoside boost. You drink another boost to give you energy. Now from energy, it pushed up again, right? Because after the energy has given you, you have to do more than the previous work you've done, which is you have to go more than the previous high you've done. Now this is the concept. Now the swing high in this scenario, it is as soon as market moved from the low and then it created this high, right? This limit that it got exhausted, that is the high. Now as soon as market created this point, right, this is another low, swing low, and then it come back to create this particular high and got exhausted. It is what? It is the swing high. Now as soon as market created this low, right, taking energy drink, then it means what? This is the swing low. As soon as it moves and then created this high, it means what? And this high it has gotten exhausted. It means what? This high, it is a swing high. So if market comes again and then get another energy drinks, and then push up again to break this previous, got to another limitation, it means what? It means you have another swing high, this is another swing low, this is another swing high. Am I communicating? Are you grappling? Very simple as that, right? Very, very simple as that. So the more market keeps, now you can see that market is now creating all of this, which is what? We can label it as low, high, lower high. Why is it a lower high? Sorry, higher low. Sorry, higher low. Why is it an higher low? It is because this low is higher than the previous low. Then, of course, after it has taken energy, it has to break that previous high. That is, go higher than that high. So you call this point higher high, right? Higher high, because it has gone higher than this previous high, which when market begins to what? Look for energy drink. I want to drink before, or I want to eat before it pushed up. Now, this point is called higher high. This point will now be called what? Higher low, right? Why is it higher low? Because the low, this is a low. Don't forget I call it a swing low, right? This swing low, it is now higher than the previous swing low. So we call it what? Higher low. Now, the market moved again and create another swing high, right? This swing high is now what? More than this previous high. That is, this previous high that was exhausted before it come back to take energy. Don't forget it was a swing high also that was exhausted before it come back to take energy, and the energy boosted it and then breaks it above. Now this point is now called what? A higher high. Now after an higher high, we should expect what? Higher low. After an higher low, we should expect higher high, and that's how it keeps on growing, right? It keeps on growing. Now don't forget I said the principle that the concept of the bulls is the same concept of the bears. Anything that happens on the bulls is the same thing that happens on the bears. Let's just do quick note on the bears. Now let's say this is where market taps into, right? This is where market taps into. I'm going to introduce a change of character in this topic also, so that you can have that knowledge, and then we'll go to the structure we'll talk about it on the real chart. Now, this is the eye, right? I've told you, let me do it this way. Let me do it this way. Delete this, and this, and this. So you will not get yourself confused, because we want to just sketch another chart. So you will not be looking like they are connected. Of course, they are connected, but it gets to some point at which they will get connected. Now, this is high, this is a low, this is a low, this is a low, this is a low. Why is it high? Because I'm coming from this point. So if market is dropping, it's going to be testing all of the lows. Note that. It's going to be testing all of what? All of the lows. Simple as that. It's going to be testing all of the lows, right? Now, market is dropping. I've told you, when market was dropping, right? It's coming from the high. It drops towards this level. Now, it gets to its own limit also. I've gotten to my limit, guy. Oh, I need another what? I need another, either food, either something energetic that will push me down very well. I'm exhausted, bro. And then you look for another energy boost or energetic food, right? You look for another food or another thing to boost yourself. Then from there, what happens again? From there, you started selling again after you've seen the energy boost. Now you go to the low again. At least this is the low, right? You've got to this low again. You are tired, exhausted. Look for another what? Another energy drink. Excuse me. You look for another energy drink, right? I've looked for another energy drink. Okay, I've seen another energy drink. I have to go or continue what I was doing. So you continue what you are doing, right? Let me mark these things. Okay, you continue what you are doing and then drop again. You go to your limit again. Bro, I cannot go anymore. I have to look for another energy drink or food to eat. Then you got another energetic drink or food to eat, and that's how you keep on selling. Now, in the concept of the swing high and the swing low, where is your high? Don't forget, your high is always above. This is your high, this is your low. From this low, market pushed up again. Is that not it? So you call this your high also. From this point again, market pushed down again. You call this your low. From this point again, market pushed down. You call it your high. Just the same concept that from the low, market pushed up, market dropped again, market pushed. Now, from this point, market dropped. And then you can see that from this point, market pushed up also. Right? You will see that market pushed up also. Excuse me. Now, this one, you can see that it went up. You can see the arrow, right? Market pushed up. Now, from that up, market pushed down again. Now, this is now the concept of the swing high and the swing low. Now, when market was dropping from this point, it is the high, don't forget. When market go to the limit, it is the low. Now, market needs another energy. It pushed up again, right? Create another high. Create another high. This is another high right here, right? It created another high, right? So that I can create another low. It has taken energy, it has taken whatever, it has been food, it has been everything. Then it begins its movement again. It drops further and then breaks this low. Then we have a lower low. Now, this point is called high. This point is called low. This swing high, right, on this certain level is called lower high. Why is it lower high? Because you will notice that this high, this is an high, right? This is an high, right? Now, this high is not up to this previous high, right? Right? If this place is 100, this place has to be what? 50. Now, if you check the value very well, you check the value very well right here, right? You see that this I right here, right? It is 1.15236, and then this I right here, it is 1.4350. Now, which of it is higher? 1.15, right, is higher. Now, that is why you should realize that if it is dropping, right, if the high would never be up to the previous high. So that is how we got this lower high. Because of market has taken energy, market drops further, and then it's more than this previous low, because this is a low. Then we call it what? Lower low. Do you understand? From lower low, we call it what? Lower high. From lower high, we call it lower low. From lower low, we call it lower high. And keep on like that, because the market is meant to sell. Simple as that. Very straightforward. Very straightforward. So this is how it actually works. So now we've understand the concept of what? We've understand the concept of swing highs and swing low. Now the impulse and correction, it's very simple. Let's look at it again. The impulse and the correctional movement. What is the impulse movement? Now, very simple and very straightforward. This is it. When market is creating this from this high and then from this low, market is dropping aggressively because it has gotten power. Don't forget, it has taken an energy drink. So it has to what? Drop aggressively so that it can quickly get to where it's going to. So this push right there, dropping, is an impulsive move. Now, when market is trying to get energy, because if it's trying to get energy, something that has already exhausted itself, you are tired already, you just be going small, so that you can just find a place to either get your energy drink or eat your food or whatever. That's how it works. So you're not going small. Of course, you will not go aggressive again. You'll be going with what? With one mind that I have to look for either a restaurant, either a place to drink or a place to what eat. You understand? You would be going gently. Now this gently move is called what we call what? Correction. You understand? Just know that when market is trying to get energy, that energy that is trying to get is a correctional move. Now, after market has taken energy, that movement that want to happen next is what we call the impulsive move. Do you understand? That is that one. Impulsive and correction. So impulsive move is after market has taken energy. Correction move is when market wants to go and take energy. Simple as that. I hope you understand that concept. So now let's go to trending. When market, if I ask you what is trending right now in your particular country, what is trending right now in a particular country? Now in Nigeria, you will say, okay, you might tell me that okay, the video is trending on Twitter, on TikTok. There's a particular dance trending. Right now you might say maybe there's one clothes that is trending right now. Maybe it is if it's about phone, S26 is trending, or S26 Ultra is trending, or 17 Pro Max is trending. All of that are what we call trending. Now on the chart, now there's one thing about trending. Anything that is trending, every human being would always want to what? Trend along with it. So as forex trading, so if something is trending and then people are doing against what is currently trending, right? What will you call that person? I think this one has gone mad. If perhaps wearing slippers on the right leg and the left leg is what is trending, and then me, I'm now taking slippers, wearing it in my arms, is that trending? No, that's not trending, because I'm not following the normal trend that is wearing your slippers to your foot. Now, wearing it to the hand, people will be saying, I think this guy has gone crazy. I think this guy has gone mad. I think that. Do you understand? That is what we call trending. Now, coming back to the market now. Trending, what does it mean? That is what is currently happening, right? That movement that is happening is what you want to follow. That movement that is happening. Now, when market is selling, for instance, because this is the sell, also buy. Don't forget I told you that anything that happens to sell will happen to buy. When market is selling right here, this is the current trend. Excuse me. This is the current trend of the market selling. This is the current trend of the market selling, because market is selling. So that's the current trend. The current trend is what? Selling. They will understand. The current trend is selling. Now, once the current trend is selling, and don't forget that I've told you that if you open your chart and then I ask you that what's the market saying, you don't just want to look that okay, market is buying, market is selling, market. No, you look from your previous data, and the previous data should not pass more than a month or perhaps 2 months, right? Going like 5 months, 6 months it's out of the league, right? It's not necessary. You just want to see what you can see on the chart. Do you understand? So if you see what is trending, this is bearish. Market is selling, which is the trending market. Market is currently selling. Now, if market is not currently selling, do you want to be buying? No, you want to be selling, because that's the current trend. You want to be looking for sales, not buys. They will understand. I want to be selling because the current trend is selling. Now, if market is buying, the current trend is buying, I want to be looking for buy. Am I communicating? So if you are now selling when market is buying, what do you call yourself? I don't know. You are the one that call yourself that, because the explanation is when everyone wears shoe to their feet and then you are wearing it to your hand, is that trending? Are you following along with the current trend? No, you're not following along with the current trend. Now, if they're dancing if they are dancing on either social media, and then everybody is showing dancing steps, dancing to one trending music, and then you are dancing to another music that is not, that is not even known at all, you are not trending along with them. Do you understand? You are doing something on your own. Do you get? So now, if you are not buying when market is selling, you are doing something on your own. You are not trending with the market, and then you have to follow the market. The market gives you, and you must collect it. Whatever market gives you is what you must try to collect. Do you understand? So if you are buying, if market is buying and you are selling, what market you are doing right the opposite of that. They will understand. You are doing right the opposite of that. So that is what you have to understand. You have to take note of very well. And then if market is not ranging, because right here we have the trending and the ranging market, right? If market is not trending, if market is ranging, what does it mean? It means market is not going up, it's not going down. It's now. This is what ranging means. Let me delete all of this. Remove drawings. Now, this is what ranging means. That is, we have this low, Don't forget, I told you that market is coming from down. We have this high, which is our limit. Now, and then market now moves from this down and moves up again. But instead of you seek for energy so it can go up, now it's now coming again to this low. Rather than breaking this low, it moves up again to this high. It's not looking for energy, it's just going up and down in a single movement. It's not looking for energy so it can break one side. It didn't look for energy. So this movement like this is called what we call swing ranging. That the market is just going from the low back to the high, from the low back to the high, from the low back to the high. And note something, that there is always a swing high and a swing low in either trending or ranging. Now, what is my swing high? This is my swing low. This is my swing high. This is my swing low. This is my swing high. This is my swing low. This is my swing high. There is always a swing high and a swing low in either trending or ranging. But there is something that is different from each other, which we are going to talk about now, which is, let's go to the topic. Now, okay, we'll talk about value structure and wick structure. Now, let's go to that topic. The difference between a trending market and a ranging market is what we call break of structure.